So let's talk about the market, and let's talk about why, if I was to look for my perfect stock, it would be a short for probably the next little while. Remember that firstly, everything you read in the news is garbage, most of it anyway. So let's talk about the Christmas rally that never happened. It turned into the New Year's crash. Okay, let's move past that. Whatever you're reading is smart money. Now, if you own $30 billion of a company, then you probably own a lot of the media behind it too. What are you going to be publishing? Are you going to be saying, oh, don't buy my company, it's about to plummet? Would you be saying, don't invest into the stock market, published by Warren Buffett, because it's about to crash? No. You're gonna want there to be as much good publicity out there about why it's the best market you should have ever bought into, while you sell as much as you can. That is what's called the distribution stage of the market, and that's a term that's existed since Edward Jones and Charles Dow created Dow theory. And so the noise is not there to help you. The things in the background is that we've got massive problems overseas, massive. The European system, financial system, I should say, is in disarray. We have China with huge problems. We probably don't even know the tip of the iceberg yet, and we have had big corrections in December, in October last year, and what we haven't even had yet is any catalyst. We haven't yet had a single domino really fall. When one does, it's probably going to be a big bankruptcy. Whether it's oil related or something else, whether it's a country going bankrupt, something's going to happen. And when that something happens, credit will tighten as quick as a noose around your neck. Consumers stop spending. Already, the statistics are showing that consumer confidence is dropping significantly, and that for the first time in a very long time, Americans or North Americans are more likely to save their money than spend their money. That is a dramatic shift in consumer habits. Liquidation happens in the stock market as people start to get scared, and it's been happening. Bank of America Merrill Lynch actually announced that in March that they had seen for the previous 5 weeks the highest level of equity redemptions that they'd seen, and the longest streak that they'd seen, 5 weeks continuous, since 2008 levels. People are already selling. Why are they selling? Because the bubble that could pop is huge. There is $600 trillion of estimated value in this market of gamble, of pop, right? Of stuff that doesn't have any value. What is a derivative, you might ask? Well, it's like me going to race the 100-meter dash. And Betty Boo says, I bet $1 that John's going to win that 100-meter dash. And then Stephen over there says, you know what, I'm going to bet $100 that Betty wins the bet. And then someone over there, Paul, says, well, I'm going to bet $1,000 that Stephen's going to win the bet on Betty, betting on John. So all of a sudden, we've now built this massive bubble that exists off of me running a very simple race that maybe makes me 10 cents. And we've got these thousands or maybe hundreds of thousands or millions of dollars behind it. That's a derivative. There's 600 trillion of estimated derivatives in the world. That number, by the way, is larger than all of the real estate in all of the world put together. So people aren't going to go out and go and buy a stock that's trading 2,000 times earnings because next year they're going to have a booming business when the market doesn't like risk at all. So high P/E ratio companies are in question. That everything's starting to pull back, and the market, and then we see this March madness where we've seen this huge rally. But what is it? Is it a bear market or is it a bull market? Well, let's stop talking about my opinion and let's start talking about things we can quantify again. This is a chart from 30 days ago, which shows you all of the buying and selling in every sector in the market. And by the way, the red is the selling. So any insider activity, this chart shows you every sector. Does anyone see a trend? In fact, if you look at the ratio, I don't think it's even 10 to 1. I would probably put it at something like 30 to 1 selling to buying, if not much more. Okay, so as the market rallied, insiders have been selling as much as they can, right? Except in healthcare, and I mentioned that to you, and that's why we were using the month of February and March and into April to go long, but long on healthcare stocks. Okay, now let's fast forward to today's chart. Now there's nothing with more buying than selling. In fact, you can barely see a blue speck on the chart except for in services. And look at what's taken over as the predominant sector that everyone's getting out of, the financials. Okay? This is the exodus. And so the question is, if everyone's selling, who the hell is buying? Right? It does seem insane. The people that are selling, are buying, sorry, were companies buying back their own stock, and it's short covering. In fact, whenever the market goes up because of a natural reversal, you get a short squeeze. But as the market built towards the top of the rally, did you know that the short interest, in other words, the amount of stocks being shorted in the entire S&P 500 reached a record level that hasn't been seen since 2008 as well? So as the market rallied, as we peaked in this rally recently, we were at the highest amount of people betting against the market than we have been since 2008. And at the same time, the people that own all of the largest companies in the world that dictate the economy are also selling too the entire time. So I don't mean to scare you, because we haven't plummeted yet. And the fact is, as much as I don't want to see the market crash as much as anyone else. I would love to see everyone's pockets full of cash, and then to be a starving person in the world. I worked for 8 years for World Vision. I'm just as much a socialist as a guy who likes to make money. But the reality is that we are probably dealing with a big drop, and we're either going to get hurt by it, or we're going to be able to A, at least protect ourselves from it, or B, why not profit from it? So those are the things that at least capital preservation is something we should be concerned with, because that slide about insanity is, if we're seeing the exact same signals that we saw in 2008, how could we, with a good conscience, ignore them? And at least not see what's going on. So the key here, I believe, is to I'm gearing up to go hard at this market. I believe it's a once-in-a-decade setup that we saw last in 2008, and I think that we've seen it again. Usually once a decade you have something like this of some magnitude. I think that right now it's one of those times. So how do we make money from that? I've alluded to the fact that my specialty is in scanning. Look, I love the stock market, and I love teaching almost equally as much. But I don't believe in working too hard. Why do you invest your money? Because you're trying to get your money to work for you. It's about trying to replicate the systems where high-frequency trading is going on, where there's no one sitting behind the computer. So we're trying to be efficient yet effective. And I don't believe that the definition of wealth is about accumulating massive amounts of money in your bank account. That's never been my goal. I would much prefer to make 60 grand a year working 10 hours a week on a beach somewhere than making 100 or 200,000 a year working 60 hours a week or 100 hours a week stuck in an office block. In trading, what that relates to, and that's what the 4-hour work week talks about, by the way, and where that example comes from. In trading, I relate that to, why would I sit in front of the computer for 6 to 8 hours a day waiting to see a trade happen? Because if I already know what I'm looking for, I can program that in to have technology do that for me. And because I'm not sitting in front of the computer with all that emotional stuff that goes on, it's just like watching the ball spin around a roulette table. You're more likely to make a bad decision when you're engaged emotionally than when you're programming things in based on rules that you know work. So not only does scanning and using technology to our advantage help make you more time and essentially more money, but it actually helps you make less mistakes. Because all of a sudden now you're not taking in ideas from every possible facet and putting them through the emotional rigmarole or the roulette wheel. We're eliminating anything that doesn't have a core set of characteristics. So again, I come back to the idea of the recipe. We're trying to create the same trade 100,000 times. Right? So, and if a stock doesn't meet that recipe, so what? It goes up, so what? You missed an opportunity. There's 8,000 more tomorrow. Never be afraid to miss a trade. Be afraid to lose money. And the way we lose money is by taking trades we shouldn't, by getting into early because we are afraid of the fear of loss of opportunity. And by having a scan, it's kind of like putting on the training wheels that take away all the bad stuff that could possibly steer us astray and only puts in front of us in front of stocks that are already pre-qualified by most of the stuff we need, most of the criteria we need, and then we have to kind of go through the final few processes. And that's what scanning is all about. It's finding out what exactly makes that perfect recipe, getting technology to look at every stock every day to find it for us, and then us spending our time, our valuable time, on quality stocks instead of sifting through high quantity, low quality stocks. This is the, before we go into the Q&A, and I'll stick around for as long as you like, this is what I really like to share with you. This is probably the most, the course that I'm most proud of that we've ever offered in a public domain like this is our Capturing the Crash Perfect Storm Scans. As I said, I'm not an options expert. I'm not an economist by any stretch of the word. I am a trader that has his niche in finding truly great setups through scans. If I didn't have scans, I wouldn't trade. Pardon me. The Perfect Storm Scans series is a full-on course. It's 4 lessons. Each of them is 2 hours long. Now, if you're saying, well, that's 8 hours, I don't have time for that, that's okay, because this course started off as just 1 2-hour lesson. So in the first lesson you watch, which was recorded on Tuesday this week, because we re-recorded it because of what's happening in the market. So the first lesson, brand new, fresh off the deck, is all about teaching you exactly the scans we use that find us all of these shorts that I've been telling you about. Every single short we've taken for the last 3 months comes from the scan that you will learn in this first video. So if you watch that tonight, you can start scanning tonight and using it tonight. That's how quickly you can implement it. We show you exactly every criteria we use, why we use it, the thought process of how we built the scan in the first place, and what decision-making process we used. Then we actually ran the scan live, and then we picked out our favorite shorts for the weeks ahead of now. So that's the very first lesson. So what are in the other 3 lessons? The other 3 lessons were all about the questions that came up for people. So people would ask, yeah, well, John, great, but maybe I've got this great scan, but when I get, say, these 10 stocks in front of me to short, how do I pick the entry point? How do I pick the exit point? And how do I identify if it's really a perfect pattern or something less valuable? So just like I said, I wanted to teach you the why tonight before the what. That's what the next 3 lessons are about. It's how to take the results of the scan and know how to draw the trend lines perfectly. How to identify a false breakout versus a real breakout. What are the highest probability patterns to trade, and what are all the other ones you need to ignore if you're going to focus on the high probability ones. ETFs only? Absolutely, Mark. A guy that works for us, Julian, he started as a student of mine 3 years ago, left our training and came back to us a year later as a full-time trader, and we hired him as a coach and in our sales and marketing department. He only trades the strategies you learn here on ETFs and select stocks. His name is Julian, in case you end up talking to him. So yeah, and basically the other thing we're going to give you is a checklist, because it's very difficult to trade properly unless you have some way to hold yourself accountable. So within the course, anything you need from us to help you make this work really well, you talk to us. I'm not operating out of my garage. We have an office, we have a team of people. We've been doing this for 8 years. You want to call us up and say, I can't figure this out. How do I draw these trend lines? Am I missing something? Here's what I've drawn. Can you look at it for me? You'll get a response back. We'll send you a personalized video saying this is how it works, or we'll just pick up the phone and talk to you, do a screen share and show you. If you have trouble with doing your trades, well, we'll share a trade tracking journal with you. This is one of the things that I do for my longs. Longs, date found, scan used, sector, P/E ratio, how found, short float, insider buying, institutional buying. Now this is overkill for a lot of people, but then you can see my spreadsheet turns it blue or yellow, and hey, if everything is green, or most things are green, I'll buy it. So we'll set you up. Yes, it is, Scott. That's exactly. Great, Mark, we'll see you soon. Mark's in. Brian, we'll see you. Right, Brian's in. Oh, yes, sorry, I'll bring the link back up. Yep. Okay. Yeah, shoot me a quick email, Scott, if you can, and I'll shoot that trade journal over to you. All right. So, bonus. I know some of you might not have as much confidence in yourself yet. You're still developing your trade ideas and your trade plans, and this market could be, well, it is, as far as I'm concerned, finished its head and shoulders. So the big break could start tomorrow. It could start next week, probably more likely. But when it starts, you want to be ready. The beautiful thing is we're on a Thursday today, so you'll probably get tomorrow a bit of ease on tomorrow. So you'll have between today and Monday to start looking at the material. But what we'll prepare you with right away is the list of all of the positions that we are most excited about right now. These are scrutinized by myself and all the coaches to the nth degree. We go through things to far more detail than you need to. You can, but like we look at things like when we see a stock has insider selling, we look up who are the insiders that have sold. We'll go into their 3-year track record of every time they bought and sold any stock they've been an insider of, and we'll look at their track history. So if we find an insider who every time he's bought a stock has gone up 80% within 3 months, every time he's bought one, then yeah, we're going to look at what he's got to say much more than somebody who just kind of buys and sells for tax loss reasons or whatever. So we every stock that you see in this video report that you'll get included with your course are the stocks that we've scrutinized like that, where we're getting in, where we're getting out, and what options we are looking to buy or have already bought. Can you use it on TradeStation? Yes, you can. We have Twigs Money Flow programmed into that. Can you retake this webinar? You took one a few months ago. If you took the Capturing the Crash webinar, then absolutely. If you've attended any Acorn course you take, you can take it as many times as you want, unlimited, for free, for as long as we do it in the live lessons. If we and every time we do a course, we update it, so you get unlimited updates to the course for life as an Acorn member. What about eSignal? Is this $97 per month? No, this is $97 once off. That does cover all 4 lessons. You get those 4 lessons instantly. If you don't have time to watch 4 lessons, that's fine. Or the only really important one to watch is the first one, and the rest is something you can chew through. It's basically an expanded version of my style of teaching, like tonight, but taking what I try and cram into 1 and a bit hours and spreading it over 3 segmented lessons. The first lesson is all about the scanning. The next 3 are all about how to make the most money out of those scans. Live class review. Every Tuesday, Thursday, we have a live class where we run the scans live and we pick out our favorite stocks for the next day. That is called Trading Room. It goes for an hour, and then that is where we'll be reviewing all of the stocks we're finding in the scans, the ones that we're sending you, plus new ones, and the ongoing market conditions. You can try that out and attend one, or you'll be given the option to have a full month of those for only $9. And you'll see the option to add that on when you enroll, and that's the Smart Money Scanner. It'll be $9, and that gives you a month of those. Also, the video that I talked about, from April 19th, that is what we call an executive summary. We send those out throughout the week. Sometimes there's as much as 5, sometimes only 3. Depends on how busy the week is for alerts. But we send out, every time we find a stock to trade and an option, we send out a video alert which will summarize the positions we're already in, plus the new ones we're looking at. That's included in this $9 for the month as well. Quick couple of testimonials, then we'll get to the questions. Oh, question, how did I come up with the name Acorn? Well, I'll answer that. There's a little funny story behind that, but it's got a little something to do with my mother. From little acorns, big trees grow was one of her favorite sayings when she was growing up. And when she heard I was getting into the stock market education business, she said, it's just like little acorns, big trees grow. And I thought, well, what a wonderful name for a company. And that's the story. Okay, so yeah, this is from Diane. I'm so truly glad I found you guys, and share that when anyone asks. I do think you should probably throw in some statistics to let people know how successful your selections were in the Christmas wish list. So that's exactly why I brought that up today. Hopefully you can see that, you know, this is stuff we trade. We're not just teaching it. We've got our own money in this stuff. From Kirk, I forgot to mention I've doubled my accounts with your trade recommendations from the Big One class and the Christmas wish list. Those, again, the Big One and Christmas that you see keep getting mentioned were the lists of our favorite picks that I'm talking about sending you this time around. So the Christmas wish list and the Big One were the last 2 capturing the crash events. Hi Carl, risk on reward turns. Please, I'm with your services. Main trading account 115, 11 wins, 1 loss. September IRA account, separate IRA account, sorry, 16 wins, 2 losses. That includes commissions, perfect trifecta. I'm skipping through obviously a little bit. I mean, I can show you as many testimonials as you like, but the key thing is that for $97, it is we're going to be teaching you the scans that in literally minutes a day will locate for you very high probability setups that incorporate all of the things I've talked about tonight. Smart money selling, market conditions, insiders, fundamentals, technical patterns. Like the strategies we're teaching you is basically taking every idea from tonight and putting it into one.